So let's go back to area patterns. Area patterns result in either two instances, breakout, breakdown. We already talked about that. Area patterns are fun to a certain extent to trade, to participate in, because you can use several of the area pattern characteristics to determine or to give you some guidelines as to what will happen ensuing after buying your breakout. Now, the most important one that I'd like to discuss is the size of the area pattern. As you saw earlier, what I drew with GT Capital, what I drew with Wilcon, the size of the area pattern can actually determine the eventual target to which a price could go after a breakout or a breakdown scenario. 80-85% of the time, it will always reach that particular target. And if we look at some of the types of area patterns, and when I say durations in time, guys, we're still in durations in time. These are consolidation patterns, also known as continuation patterns, because they are area patterns that continue the previous uptrend in place before the duration happened. And as it continues, majority of the time, what will happen after the duration pattern ends? It will continue going higher. So these are the different continuation area patterns. So we have here ascending triangle, symmetrical triangle. You have here falling wedges for uptrends, rising wedges for downtrends. Ascending triangles continue uptrends, descending triangles continue downtrends. Rectangles can happen on continuations on either the uptrend or downtrend. Symmetrical triangles can also happen as a continuation on the uptrend and the downtrend. Wedges, falling wedges can continue the uptrend. Rising wedges continue the downtrend. Now, in all these 5 patterns, you can use the size of the base. Or in the case of a triangle, you get the size of the largest distance, or the size of the rear. You take the size of that and you put it on top of the breakout point to determine the minimum breakout target. After it breaks out, you can already see, once you backtest and evaluate and look back at your trades, you'll see that 7 out of 10 times, you'll see those prices hit your minimum breakout targets. Now, that using the size of the base applies to all of these patterns except for the lower right pattern, which are flags and pennants. Flags and pennants are short-term continuation patterns. If you look at modern technical analysis textbooks, will teach you that flags and pennants last on an average between 5 to 25 days. And they continue in a sideways movement until such point it breaks out higher. And the reason why flags and pennants are particularly favorite of traders is because you don't use the size of the flag or the pennant, the size of the duration, to measure the minimum breakout target. You use the size of the flagpole, which means that you take the size, the length from this low all the way to the high, and then you put that on top of the breakout point to determine the minimum breakout target of that particular flag or pennant. Flags and pennants, 85-90% of them typically happen at the end of uptrend moves as prices are starting to accelerate, moving higher, moving at an unsustainable pace. Hindi naman 90 degrees, but 60 degrees above, right? So these are essentially the durations in time that you can be able to see when you participate not just in Philippine stocks. You can see these in cryptos, commodities, FX, bonds in particular.